Hey folks, welcome to another pre-US session. Here we are, Friday, the 7th of October 2022. And we have NFP to come here in about an hour in Ireland. So big US data to come. But what we've seen since we've last been talking has been a pullback on equities from sort of best highs there, and oil just grinding it out to the upside. Pretty timid on the bid, it has to be said, because frankly, while we've had the 2 mil OPEC cut on production, the US are now sort of counteracting that with now talking about lifting the sanctions on Venezuela oil. So, there's a little bit of a timid step to the upside here on oil. But I think, generally when we have a little bit more clarity about lifting of those Venezuelan sanctions, we can then sort of get into pretty wild prices. But, if we get over onto the charts here, you'll see that essentially we are now on oil. You can see just here in the center on the screen. And I'll go to the big chart here. You can see, I'll just put this one down. Yeah, so you can see here pretty much, hide all these drawings here. You can see that we're just coming back to this spot here, which was the sort of pip high on the invasion of Ukraine. And so we're sort of back to there now, just about to hit into that, which has been a target for us for a number of weeks now, really, as we've been sitting under here, of course, 2 weeks really on the pullback here. So, if we put back on these drawings, we can see that essentially we're lifting in here lots of liquidity to the upside on the 20 weekly moving average sitting around the R2 today. But if we show you this on a daily pattern and just let the charts shift here, we will get to talk about NFP now in a second. But here we are back at the invasion top on the daily bars in this market. So, that's oil. I think we can continue to bid up here, but just look out for sellers coming in around this invasion top high at 89.66s. There may be some profit taking into that, pull back to VWAP, load up the buyers, and then really go for the upside. So just really be careful there. It's not a case of just buying, set and forget, and come back to it later. So all right, let's talk about NFP here, because really that's the big show today. All right, so if we get onto the SPOOs, and you can see on the daily, we'll just have a look here. There we go. Well, these are actually weeklies, weekly bars. You can kind of see going back to the 2020 November, kind of at the 36.35s half, and then this red level here. These were really important levels to monitor as we sort of came into this dip area. See if we go offered or bid in around there. But the big level for me, really, as I've been talking about for a week now, at least 37.59's quarter, the low of the week, the 27th of June. That's really a big area because all this excess we've seen down into here below the 38.29s, and the market came up near there yesterday and just didn't have the stones to go any further. Now we're back to this 37.59's quarter. And again, the market just doesn't have the stones. Now, it is NFP day, right? Initial jobless claims yesterday coming in, a bit of a beat there for the first time in a while. So, and the market really didn't like that, but also something to monitor. And the bigger awareness here is that the market's been pretty much bid up here now for a week. Big green candle. We got into the Goldman Sachs level 3600, fine, big deal. But really, ISM beat as well, a miss. So therefore feeding into the potential for the hawk to be a little more dovish, as in stepping back on the interest rate cycle. But we've heard since, from the Fed members on the FOMC that they're not going to turn the ship around anytime soon. And they have another, I think it's 1.25 percentile of rate hikes to do before now and the end of the year. So that's going to be 75 at the next meeting and then 50 at the one after that. The pivot, I think, is just absolutely way too speculative for me right now. And I think there's a lot of people who've barreled into the longs this week who may be a little bit surprised by weak job numbers today. All right, weak job numbers, because we've seen this market propped up over the last quarter on really good job numbers. We've seen this market disregard the fact that we are in a technical recession, but because we have really good jobs numbers and the wage growth is continuing. All right, but now we're starting to see the wage numbers tighten a bit here, as in the unemployment figures tick up here. Initial jobs claims ticking up yesterday. And then we're also seeing average hourly earnings maybe not increasing at the pace that they have been. So fine. I think today, I think the biggest tradable event today is soft. It's a miss on the headline figure, and I think that's really going to be the biggie. So we are looking for a headline. Consensus here is 250,000, prior 315,000. So if we get 200,000, 220,000, I think we're going to snap back down to the downside here. But taking that on the other side of the coin, there is the buying that we've seen that you just can't fight with. And going with that thesis of what the market has done on so far on the miss on ISM, has been go to the upside on bad news. Bad news, bad data is good, and good news is bad. So if we flip my thesis, right, and bear with me here, if you kind of run with what the market has showed us so far, if we have a miss on the jobs numbers, then the thesis is that will feed into the Fed to step back from their aggressive rate hiking cycle just a small bit, and therefore that would be perceived as good for the markets, and we would go up again. Okay, for me, the media might be saying that that's what the market is doing. I think I don't really care what the general media says. I really just do what is happening, and that's, look, we're up here on miss on ISM. Initial job has ticked up a little bit yesterday. The market came back, but I think there's a bit just pre-positioning coming into the data. So net, I've showed you kind of both sides of reading a miss figure today on NFP. I think if we get a good beat on NFP, or just even a beat of any magnitude, I think maybe we could be also coming down. So because that would feed into the Fed to then say, we really have to persist with the aggressive rate hiking cycle. All right, that's it from me on the NFP story. Let's look around these markets at maybe some kind of alternate sort of trades that you could be looking at here, like for example on the Dixie. All right, if you get a miss on the job numbers, I think we're going to head back up here and hit this channel high. So this is the channel we're putting. Look at this big doji here, like turning as if it's going to go more aggressively up here. And we're looking at weekly bars, so that'll be interesting here. But look, candlestick pattern aside, I think if we get what would bid more risk into the dollar here, that would be like a big miss on the jobs number. So then that would bring us back up into the, say, 112.18s here. And then, we'd be looking for shorts off of the dollar and longs on the euro in and around kind of this spot here, just below the 2001 low. That's a trade to be looking at, I think, for the FX hounds out there. Also looking on the bonds picture. T-notes has been sliding off a bit of a face here the last couple of days. The bund very much as well joining it, and I think leading it in the morning time. So we're down to supports 111.11s to come up here for the T-notes, and that's going to be kind of into this sort of interesting knot, sort of where we opened up on the on April 2014 for the historians in the marketplace there, right? Look, we've broken out of this trend up here and we've come down. I just don't know if the market's going to aggressively offer below 111.11s there. I think, if we get a pretty shitty number today, I think we're going to turn on a dime here and try and come back up, at least to pivot on T-notes. And gold, Look, flip a coin, and that will show you what's going to happen on gold right now. I think it's probably going to move with the bonds. So, maybe a little bit of downside into the 1710s. And I actually think the best supports are down at 1695, 1700s on gold, and then look for a long. Because if we do look at gold, it's showing me that we've essentially, in my big bull flag scenario here, see this, the bull flag scenario right here and here, we have actually slipped out of the bottom here. We faked out to the bottom, and we're back inside. So if we pull back down onto this 17s area, I think we may come back up across this area, right? That's just one thesis. That trade was good to us there back in June, and mid-July actually, and it may be good to us again right now. But gold's very hard to going to get a really simple, clear trade on gold at the moment that you can hold for a number of days. All right, what else? Nat gas got down overnight. I don't really have the fundamentals on that, but really the supports were back above here at the 7.017s, and just really that got gapped down last night on that. What else? Cable. We're not really talking about cable today. And Bitcoin, you might get some moves on Bitcoin here over this dollar scenario. We have actually seen Bitcoin trade over NFP to some interesting degrees. But for me, I think I'm not interested in Bitcoin until it's a lot cheaper at 1600, 16260s thereabouts. I don't even want to look at Ethereum. All right, go on. I hear you say. Here's Ethereum trading 1351s. Actually, that's not too bad. Not too bad. Lo and behold, it might be cheap. All right, that's it for me for another pre-US session. Please do click to like and subscribe, and join us live for this session in Discord. All right, have a good one. I'll talk to you later. Cheers.